Hello and welcome to today's Data Dynamics Platform 3x3 series. I'm your host, Kyle Johnson, Director of Digital Experience here at Data Dynamics, and joining me today is Data Dynamics board member David Reilly to discuss cloud computing challenges and opportunities in the financial services industry. David, thank you for joining me today.
Thank you, Carl. Happy to be here.
All right, David, first question. After a generally cautious start to adopting the cloud, the last few years of digital transformation efforts at multiple major financial services enterprises has really accelerated the adoption industry-wide of cloud technology for data management and for gathering insights. Of course, cost, compliance, and security remain top of mind concerns. How do financial enterprises address these concerns and successfully migrate data and workloads into the cloud?
Well, Carl, the most important thing with that migration is to know the data, to know the usage patterns, to know the security needs, to know the level of confidentiality that has to be exercised across the data. So data needs to be segregated into hot and cold data, frequently accessed and less accessed data. Part of the reason for that is that cloud storage often has hidden charges. It's common for cloud providers to charge for both the storage and retrieval of the data, and to charge for egress fees if the data must leave their cloud. Cloud retrieval fees usually appear as API calls to get or to put data into or out of the cloud. And egress fees are based on the data read from outside the cloud. So knowing the data is key. Therefore, you can tier the storage and you can tier the data, but that is only the first of several important steps to be an effective adopter and user of cloud technologies.
That's right, and I think in the rest of our questions we'll cover today is the rest of that data journey. So we introduced cloud tiering as the first critical step of a longer data journey. What are some of the key benefits that cloud tiering can provide, and what strategic advantages does it unlock for the future?
Well, again, here, Kyle, I think the key is to know the data as that first step on your journey to being a truly strategic adopter of cloud services. Knowing the data is key. So with cloud tiering, that cold data, the data that is not frequently used, is stored more economically, because with the platform, it's possible for you to reduce your backup footprint, backup license cost, and backup storage costs, because you can continuously tier off the unused or less frequently accessed data onto a cheaper platform. With that tiering and with that cloud archiving, the cold data can be allocated to a cheaper cloud storage tier, and at the same time, it remains accessible from the original location. Now, why is that important? Because with this approach, you can extend your on-premise capacity into the cloud transparently. Key there is what you deliver, which is the right data is in the right place at the right time.
The responsibility, comprehensive data management, and custodianship is at the heart of the financial services industry. If the Data Dynamics platform helps firms to truly know their data, what are some of the ways it can help them deliver better services to their clients and extend the critical data custodianship responsibility?
You know, I think, Kyle, oftentimes customers may come to our platform because of the cost reduction benefit they get, the effective use of data they get, but they stay because of the insights into the data that they can gather, and in particular, insights into unstructured data, which is the hardest problem to solve. So one use case I would cite is around AML, anti-money laundering, and KYC, know your customer responsibilities, that every single financial services company around the world has to take extraordinarily seriously. You build these relationships with banking clients where the individual bankers know their clients extraordinarily well. But there's a moment every year or 2 years where that banker has to ask for proof of identity from that client. And that proof of identity can be a driver's license, it can be a passport. Now, when you know someone so well, that can be a very awkward conversation to have. Why do you need this information? Because you know me so well. But laws, rules, and regulations mean that every single bank needs to fulfill those responsibilities and has to have access to either that driver's license or passport, and it needs to be stored as a means to verify that client's identity. Well, one of the ways we can help is by proving to that client that we take the storage of that information extraordinarily seriously, even though it is stored in an unstructured manner, and give them the ability to know when somebody has seen it, accessed it, or moved it. Our platform will allow us to tag that driver's license or that passport, and most importantly, provides a capability where the client can know when that data has been accessed, moved, or used. Now, why is that important? 2 reasons. It proves to the client that we take that stewardship responsibility of their data extraordinarily seriously, and they can see that we will not only take that seriously ourselves, but we'll give them some insight into how that data is being used and how that data is being accessed. So again, it's underscoring that key responsibility of knowing your data and ensuring that the right data is being used in the right way at the right time, and it's providing visibility to the ultimate owner of the data in financial services, which in this case is the customer.
Well, thank you so much, David, for joining me today. I think this is a very important discussion to have.
Thanks so much, Carl, and thanks for the opportunity to share a few thoughts.
We know we've barely scratched the surface of this critical business challenge for every enterprise. If this discussion has stimulated any questions or you'd like to continue this dialogue with us, please don't hesitate to reach out. We're here to help.